Well, hello folks, I'm L.A. Little, founder of Neoclassical Technical Analysis, and I want to welcome you to this show where we're doing reviews of stocks that mentors have chosen. We do this once a week usually. We try to post it. It's a kind of a live setting, so a little bit raw, but it's from our mentors who have mastered the model, the Neoclassical model, and what we do is we look at these stocks that they have found through their searches and have decided are probably the best trades they want to pursue, and we look at them and we decide if they are or not and how we would go about it. So that's what this show is. Enjoy the show, and I'll see you on the next one. And as usual, we try to start with some of these indexes to look at them and see what they're doing. And what I've been talking about recently is the fact that at this point we're in a range, we're in a smaller range, if you will, with the kind of a 2-week range down here. Most of the action has been in this place. We're kind of just grinding back up here. We got the whole Fed thing that's coming up, and the question is can it break back over this and go back to the top of the range, basically come back up into this area. Now, if you remember, these two are congruent right here, these two volume bars. And so I would expect if we do break back over the swing point high, get back in here to test these retest regions on the swing point lows, I think it will probably do its best to make its way back up to the top again. And that's not that far. We're only talking 50 S&P points. And so if the Fed comes out on Friday and says, QE for infinity, I'm sure we go back up there. The hard thing for this market to sell down at all is this whole notion that, the economy here is still pretty good. I mean, you got manufacturing that's tough. You've got some, inverted yield curves. You got a lot of issues. But the consumer, as we were talking about just a few minutes ago, consumer's still spending. The economy's not in bad shape. And so if I'm going to throw a bunch of money at this thing and this is still doing pretty well, guess what? It's going to do even better, right? It's going to go back up. So I think that's the bigger issue with trying to think this market's going to break down. And if we break down, if you look at it back here, the breakdowns would be, this is on the weekly, the breakdowns would be coming through these swing point lows, and even if it did, I think the target would be here. I don't think we're targeting this low or breaking this one down here. It's really down here that things get nasty. Up here, it's not as big a deal. You probably come down here and you bounce again, and then maybe you set up some sort of structure to get you down there. But that's a lot of projections and expectations. Over here on the monthly, I've been watching this little bullish retest region here. We got up underneath it, back over it for the end of the month. We've only got another week or so to go. So unless we get some really bad news Friday, and we've got an expected event, so we kind of know something's going to happen potentially. Unless we get bad news, this thing looks like it's going to hold on the first retest region, which is a positive. The negative part about it is that it undercut it, right? But that usually doesn't really change things. It just says, oh, well, it's a little more negative than we expected. But you also have to realize that here it didn't carry far, and you have a minor bar. The width of this bar is pretty small. And so to carry up underneath it, again, to me, doesn't really mean that much, doesn't say that much. If I look at the other indexes, they're all set up the same way. Here's the NASDAQ, set up the same way here. All of them, basically they all failed on a retest region on the weeklies. The NDX is set up the same way, failed on the retest region as well. And the weakest one is the Russell. The Russell still has that same look to it, right? There's still a range down here. It's just that when you look at it on the weekly, the Russell looks a lot different in that everybody else has made new highs. The Russell's not even close, right? Still way down below. So just a much weaker index. The banking sector tends to be the weakness here, and that evidently seems to be tied to mostly the oil patch and the shell companies and potential bankruptcies in those areas, and I think that's what's kept this thing underwater for so long. So that's the indexes. Again, I don't have a strong opinion about what's going to happen on Friday, whether anything does or doesn't happen. We'll just have to see it and play it by ear. If you break higher, we go back up to that area I talked about. If we break lower, test those swing point lows and potentially break them. So that's the way it sets up. We got about 4 or 5 stocks to look at, so I'm just going to pop through them alphabetically. First one is Alamo Group, and let's see what this is. XLP. I assume this is the car rentals, which is interesting that we got, if that's what this is. Pull this out of the way. So it breaks over. I'm going to start with the monthly and to work my way backwards. So monthly has a high 120. We're at 116. So it has an ABCD structure. So as we saw it on the daily, it's looking pretty bullish. It got an ABCD structure here to take it up to new highs. Doesn't look that extended when we look at it. Yeah, 71. So really no extensions here. It's in kind of a safety sector. No extensions on it either. So all that looks fine. And if we go back now to the weekly is breakout. There I don't really see any strong ABCDs to take it up higher. So this one's not playing from that perspective, but it did have a little retest, regen, and regenerated higher as a nice push up. And then finally on the daily, oops, that's the monthly, go back to the daily. Daily actually has an ABCD structure. It looks like it just about completed. Right, would have been to here. If I duplicate that just to ballpark it, it's almost done. And so, yeah, I mean, it looks strong. It's just like, what are you going to do? You're going to buy it here, or you're going to try to get some sort of retrace. I think you almost have to try and get some sort of retrace, maybe bottom of that bar. You know, the charts have lined it up great, right? They show the big support here. That is the support. So you try to buy into the support somewhere. And I think you've got, you know, you don't have to take a lot of risk on it either. I mean, I like the way it's set up. I mean, this should give you good support on the way down. So if you want to play it on the daily time frame, buy it in here, shooting for new highs. Stops are down here. It's a pretty good trade. And that, you know, the trends are up everywhere. So it's a good looking stock. No, good, thanks. So it's agricultural, industrial. It's not maintenance of equipment. So I guess the fact that it's equipment maintenance maybe puts it in that group. But anyway, it's a strong looking stock. Let's look at the next one, Booz Allen Hamilton. What does this one do? This is software, guys, okay? And so XLY as well. And they have a bearish on the daily. What is, oh, that's the, sorry, I'm getting confused here. Let me go back at this, look at this one more time. Bullish 99. So this guy's been bullish a long time. So this has got kind of stretched. It has an ABCD up. You know, here I can see, so you know that can go farther. Let's pull over and look at the weekly to start with. I mean the monthly. So monthly, this thing has just been on a tear. Weekly, you know, I don't see anything there. ABCDs all look like they're done and everything. Weekly, same thing, right? So if you're trading something like this, you're really trading just dailies, and you're just trying to get entries and then backing up. I wouldn't chase something like this. This is something you just wait on. Yeah, I just, you know, it probably will complete unless the general market comes back. And then you just wait on a retrace and let it come back in, and then you try to play it to the upside. Problem is that you just have to trade this thing because you don't know when it's finally going to take a deeper retrace and reset. So good stock, you just got to play it on a smaller time frame. EDU is education technology. And let's see what these bullish. Okay, so it's not extended. It's got a big ABCD up. It looks like it actually got reset there, so actually it doesn't. So it's more of a consolidation thing going on the daily. Let's start with the monthly. So this is a China connection, I'm told. So it's providing educational services in China. It just got a breakout. It's coming up against resistance here, right? No volume. So this is not something, just looking at the monthly, this is not something I'd be chasing trying to buy right now as it's trying to break the monthly. You have to let it resolve that first. If I look back over here, there's an ABCD on this time frame, and that one is just about done, if not done. So it's gonna finish up about the same time that monthly either breaks or gets tested, and then going back to the daily, it's coming back up to the highs here, which is 109.90. So again, I don't think this is something I'd try to wedge into now. If I did anything, I would just watch it and wait for a better setup somewhere. And I'm not even sure what that setup's going to look like. Maybe coming back in to do a retest regen off of this swing point is probably the trade. You've got an overlap there right in that area, so I would probably just let it come back in. And that actually lines up pretty good if it did, right? Because you have your high here, you have the bottom of this big bar. So that little area right there becomes a pretty good area. You're using the retest regen, expecting it to regenerate higher. It looks like it hasn't tested 97.50. 97, yeah, it did. So it's tested once already, so it'd be the second test. So it actually should come in deeper on the second test. So I would just give it room and see how far it wants to test. And if it comes in with lower volume than this, gets into this area and then starts back up, then you buy it. Use that as your area expectation that it will hold, and you know, see where it wants to go. And it would be another ABCD. It would take it up there somewhere. So again, I think there's probably better trades. I mean, just in terms of setup and risk reward and potential. Icon PLC, what is this guy? This is medical devices, okay, consulting. So they had a big spike. It turned. These are wonderful tradings. If you see these things happen, right, when they go up like this, and I've talked about it before. And this was one too. You know, it goes up, sets a new high. You know, here, a little bit different. This was a good one, right? 2 bars up, big thrust, but it actually closes at the low. When you see that, that's a reversal. It's probably going to give you a deeper pullback. But when it finally hits where it's going to hit, it's probably going to make it back up to the top of that thing. And so, you know, just using that, you can expect these ABCDs to try to work its way back up there at some point. Let's look at the weekly. Breaks over, test, and it's kind of holding, and the monthly breaks over and it's testing. Had lighter volume, that's why it's red, suspect. So that's kind of a consolidation on the monthly, even though it's a breakout. You do have a big ABCD here. If it gets formed and, you know, continues on. I mean, it's already formed. It's just, will it continue or when will it continue? So you have a nice big ABCD here. So again, that kind of leads into that thing where it's probably going to get to that high again. So I don't mind the way this one looks. It looks pretty good. Get back to the daily. I gotta remember where my charts are. Here's the daily. So didn't get over the swing point high yet. Yeah, the ideal is that we'll probably get up here. It's just how are you going to get a trade that gets you back up there? And I probably would want it lower. I just don't want it too low, right? I don't want it breaking these swing point lows. So I'm trying to find a spot that makes sense, and I just don't see it. So I don't know where you buy this thing. I just don't see the trade. It's an okay stock, okay setup. It probably is going to go to the top. It's just how do you get into it? If you buy it here, you just can't buy your full lot. You've got to be able to buy it deeper or something, because this thing could easily retrace deeper. I think you just wait. I don't know what to do with it. When I don't know what to do with it, I just don't do anything. That's usually the way I view things. If I don't see a clean-cut trade, I just kind of put it on the back burner, stick it on a watch list, and watch it. Eventually, it will set up so that you can see a trade that makes sense. Right now, I just don't see it. The last one on the list is Psa Public Storage. This is in the XLRE, which is kind of a safety. These guys have been doing great. It's not extended. If you look at the numbers here, that sector's still strong. That sector's been strong. And so let's pop to the monthly and work our way backwards. So monthly is going up to try and hit back in. Now this actually had the takeaway bar on a monthly way back here. And so, now that you're into this, which was down here, now that you're into it, you can expect it's probably going to try and make it to the top. So at some point, it looks pretty good there. It broke over 2 swing point highs on the way up. And got the thrust, and so that all looks good. Going to the weekly, this one actually has an ABCD structure that's here, and if you just drag that up and duplicate it, it would be up to there, so that gets you almost to that area we just looked like on the monthly. And let's finally go back to the daily, and on the daily there is a little ABCD structure here as well, isn't it? Right there. With a little bitty pullback the next day and then a continuation. So that also is good. So I think something like this, you just try to find an entry. And yeah, so I'm being told here the target here is about 269 to 271 or so. And again, you just have to find an entry. So like when you find, you've got your B point here. A lot of times these things will mill around in that area, right, as they try to get higher until they take off. And so you just try to find an entry somewhere in that area, like the low today would have been a potential entry. The issue, I guess, is you're going to have to use this, right? And these C's. Yeah, you have to use those as kind of the area that I don't think it should get under here now, right? And so that's how you kind of set it up and say, okay, my stop's going to be an ATR underneath here, and I'm going to try and just wedge in somewhere around this B point and try to get that extension. Yeah, and so that's another way. I'm being told here there's 2 ways to do it, and I agree. You don't have a retest regen on this daily that was broken, And so if you do wedge into it here somewhere, and you're using this area as kind of the ideal that it probably won't get up underneath here, so that's why you make the first purchase now is the idea. And if it comes in deeper, right, and comes back to this, you got a really good chance that this is going to be bought for two reasons. One, it hasn't been tested and it's way more than 6 bars. And two, the volume bar is right here. So more than likely, it wouldn't violate this area on the first test. And so if you make your second purchase in here somewhere, in the top third it would be, if you make your repurchase there, you've got to, purchase up here, purchase there, that puts your average. And usually you do those where you do like, 35, 40 up here and 60 down here. Then that puts your average somewhere in this area, right? This would be the resistance now on the way back up. You can at least get out making money if you do it that way, if it fails and tries to come back. And so that's usually the way you structure those things. And you can also trade it a little bit differently too. I think we've talked about this before. The fact that this is the first test, if it just comes in, you get the buy and it flips back around, you can always take the first one and you can just take your profits as it comes back into that guy, right? That would be the area that's going to be resistance. And so you make that first purchase with the idea of flipping it right there. And then you see if it continues on up. If it does, then you use whatever retrace comes after that to make the next buy, because it's still proving that it's strong. But you can play it by ear, right? It just depends on what happens when it gets back up here. In other words, if it gets up there and it looks like it's going to fail, you flip half of it or you flip all of it and make your trades. So yeah, that's a good setup. You just try to wedge in here somewhere at some point. This reminds me of another one that I've actually had for a while. I just popped it up in here, which is OLD. Long-term care ETF. You would think this would be companies that are doing long-term care, right? Well, it turns out this is more just like the sector you just saw. It's actually a lot of the names inside this ETF are XLRE type companies. They're REITs, and so this guy's done great because of that, right? If you just flip through it and look at it, it just keeps rocking higher. And I talked about it a long time ago to all of you guys. It's something I bought for myself and been holding. But it's kind of interesting because it's kind of you look at some of these ETFs and you think you know what's in them because of the name, and then you go look at what's really in them and it's not what you think. And it just so happens this sector that it's in, that most of its names are in, is a strong sector, and it continues to do well as a result of that. Okay, to kind of cap this off today, this is something that we've been working on. One of the mentors in particular has been putting this together, and what we've been doing is looking at cap weighted in the S&P 500. So if you take the S&P 500, you look at it cap weighted, we can look at trends for each of those stocks inside. And if you think about, to give you context, if you think about some of the other studies that are out there that have been out there a long time, there's a lot of studies that have to do with market breadth, right? Things about, how strong is the market, how many stocks are above their 20-day or 50-day moving average and things like that. And that's typically how breadth is looked at. Here we're looking at breadth, if you will, in terms of trend. Are they bullish, are they bearish, are they sideways? Now this actually should say bearish. We got the label wrong, but essentially that line, the red line, is bearish. So if we go through and we look at what's happening here and you start thinking about the trend, as the red line comes down, as the bearish number of stocks kind of get to a minimal level, your bullish stocks kind of get to a maximum level. And the S&P is the black line. As the bullish number of stocks get bullish, in other words, the breadth is bullish, the S&P climbs up with it. At some point, this peaks. And when it peaks, and when the bearish ones peak, right, on the opposite side, and start to turn, eventually you get the S&P 500, the market itself, starts to recognize that, right? So as this comes down, the S&P starts to roll over, the number of bearish stocks increase, and eventually you cross over, right, where the S&P actually crosses over the bearish line. You get kind of a sell-off that takes place, and eventually you get the opposite, right, where the bearish, the number of bearish trended cap-weighted stocks peak, and vice versa, the number of bullish ones peak on the opposite side. You flip back around, you go the other way, and so that's kind of the cycle that goes on. Now, what's interesting to me at this point is we've kind of reached a peak, if you will, looking at, and again, we're just talking back to March of 2019. We're just talking about just a few numbers here, just 2 cycles, if you will. The question is at these levels, right, where the bullish is where it was before, are we going to see this turn up now and these turn down, or are these just going to hang for a little while and we're going to get the continuation of the market to some level before it turns, or just a little bit farther down or something, right? And so the question here is, where is the market itself going to turn? And are we at the peak, or are we going to go a little bit higher or actually start to roll over? If we start to roll over hard and start to turn here hard, I expect the market's going to turn with it. It may just have a little bit of a delay, and it may go right away. But that's kind of where we're at. And the other thing is that what's good about, oops, didn't mean to do that. What did I do? There, sorry. The other thing that is interesting is that you get divergences that take place when you're on these things. And the divergence here is when the number of stocks that were bullish started to move down, you had the market still go up. And usually that's telling you you've got a false break to the top side. In other words, I've got less and less stocks that are bullish, yet my market keeps going higher. In other words, it becomes more bullish. And that typically just doesn't fly, right? And eventually you get the turn, which is what happened. So this can be good for identifying these kind of tops where I don't want to buy that breakout. I actually want to be selling it. And so that's kind of a good thing. Now you can do this on any time frame. We actually have the weekly time frame as well. This is that chart. And when you're looking at this, you're looking at the exact same idea. It's just that here the oscillation is not as pronounced as it is on weekly charts on this time frame. So what we're going to have to do is you get a much longer time frame here to see it. But you can see as this narrowed, that was where the market bottomed. And of course, when the market goes up and sets new highs, you would expect it to have the bullish time frame be peaking, right? The market cap bullish be peaking, and that's kind of what it did. You don't know if that's the high at the time, though, right? I mean, you're just not going to know that. What you're really usually looking for is divergences to tell you something. And on here, once we get a lot more data, we'll be able to get more information out of something like this. But that's the cap weighted. That's the end of the show today. But it's something that's interesting to look at, some kind of preliminary work that we're doing that's going to be added.